Hello students, how are you doing today? And welcome back to lesson 4. Today's topic will be dollar cost averaging and laddering your buys. I hope you guys have had a fantastic day trading so far, and especially I hope you've had a fantastic time following these tutorials of mine. I'm very grateful for this opportunity to be helping you guys because my ultimate goal is to absolutely improve the cryptocurrency community while also ensuring that you guys are equipped and empowered with the skills to succeed in trading. I've had a pretty awesome experience, you can say. It's been probably one of the most remarkable journeys that I've had trading in the past 3 years. And I just really hope that I can share a lot of this experience that I have with you guys. And I really appreciate and respect the fact that you guys respect and appreciate what I'm doing for you as well. So hopefully we can help each other in the future and especially now. I really genuinely hope that you guys are going to become better traders. And I just really hope that you guys are taking a lot away from these lessons because I'm absolutely trying my best to make sure that you guys are having a fun time learning because I do believe that education should be very fun. And I really hope that you guys are having an awesome experience in these lessons and taking a lot away from it. So today's topic will be dollar cost averaging, which is definitely one of my favorite topics because of the way that I personally ladder my long positions when I'm swing trading and when I'm day trading, and especially how I dollar cost average. So let's get into this and talk about what dollar cost averaging is. The way that I see dollar cost averaging is a way to purchase the coin that you would like to invest or trade with at very different price points. This way, you get yourself the most average type of price. And the best way to jump into this is to just give you guys straight up examples, to be quite honest, okay? So I'm going to give you guys tons of examples for you to really understand. But first of all, I want to explain the way that I used to purchase my coins, right? Regardless of the position size that I was playing, whether I was actually trading with $1,000, $10,000, $50,000, or way back then when I used to trade over six figures as well, I would actually buy in one lump sum. Okay, one lump sum, I meant to say. And that wasn't really the best way to trade whatsoever. And it took me a while. It took me almost about 6 months into my trading career, almost a year actually, to realize, hey, maybe this is not probably the best way to trade. So what I did was I took a step back. I learned about laddering my buys, which was a very effective way to dollar cost average it. This way, I wasn't stuck in, one position, right? If the price went down a little bit, I actually had a chance to purchase a little bit cheaper to dollar cost average out my position. So let's just say you purchased only from one specific price point, right? Well, you guys are stuck, unfortunately, right? You're stuck with this specific price that you bought it at, and you've already invested 100% of your principal position, which I never recommend to do, keep in mind, okay? I always recommend to play only a very small portion of whatever you guys are wanting to play. So if you have, for example, a $10,000 bankroll, the last thing you want to do is play the entire $10,000, right? Always start off very small, first of all, like I always say. Start off for the experience, right? Get those lessons under your belt because the last thing that you want is to actually have, these very expensive lessons that don't really need to be expensive whatsoever. What you guys need to focus on is getting the experience first. And that comes with a lot of time, guys, right? So please don't play really big positions. I've had a lot of friends who actually felt like they needed to play much bigger positions so they could actually win more money. You guys have to remember the simple code of a trader, which is to make good trades, right? The last thing you want to focus on is winning money because that's not the way we should be trading, okay? The money will come, guys. The profit will come. What you need to focus on first is just simply making good trades, guys, right? So once again, Don't worry about the profits so much at first, right? It doesn't really need to be be about trading. You guys need to first of all practice every single day. You got to get these lessons under your belt. And once you get these lessons under your belt, you simply just focus on good trading. And once you focus on good trading, the profit will naturally roll in. So please make sure you guys focus on good trading once again, okay? So let's get into dollar cost averaging. And let's talk about some of the mistakes that I used to make, right? So, some mistakes I used to make was I would buy literally in just one position, no matter what position size I was playing. And if it went down a little bit, right? Because I was playing my entire bankroll, it just was not good, right? I'm just watching it and I'm waiting for it, and I didn't understand a lot about risk management. So then I'm saying to myself, wow, if I actually saved a little bit of my money, then I actually could have perhaps added more to my position at a cheaper price to kind of dollar cost average what I'm getting to, right? So let's talk about some very specific scenarios that I have laid out for you guys, and I actually have a spreadsheet as well, just as an example, okay? Let's just say add an example right here. Okay, we're going to take some very specific examples right here. Let's say you were a longer term investor, right? And we were around these positions right here, okay? We were at these positions right here, and you say to yourself, okay, I'm going to take my loss at $5,500, right? But I'm going to start buying Bitcoin at $8,000. So let's say I start buying it, or I bought at $8,000 right here, and you bought it only in one position, right? And you say to yourself, okay, well, I believe it'll get to at least the recent areas of about 10K, right? So you guys know about risk management now. So we're going to pull up our risk management right here for our long position. This is around the $8,000 range, and you buy it at $8,000, okay? Right? And you say to yourself, okay, I'm going to take my loss at around $5,000, right? Around $5,000. And then you say to yourself, okay, well, I believe it's going to get roughly, we'll just say the previous high of the interim, which was about, say, $12,000, and you thought it was going to get up to there, okay? So now you've got a decent risk to reward ratio of about 1.13, right? So you buy it at $8,000, right? And then now what do? You just sit there and you wait. It's going down. Oh no, it went down to 7K. Oh no, it went down to 6K, right? But let's just say you didn't play your entire position, right? And let's just say you were smart about it and you actually ended up this spreadsheet is available for you guys to download in the link below, by the way. I personally use something called Open Office, which is free to download because I don't really have a necessity to purchase Excel. So it's actually in a different format by Open Office, which you guys can just Google Open Office, and it actually might even open in Excel as well, so you can take a look at that. It's used the exact same way as you guys can easily see already here, right? So let's just say you bought yourself at 8,000, right? Or sorry, let's just say you bought yourself let's say you were wanting to play you're wanting to play all together. Let's just say you wanted to play 4 Bitcoin, okay? Let's say you want to play 4 Bitcoin and you purchased 1 Bitcoin at $8,000, right? Okay, well, that's actually not a bad price at all. But now the price goes down a little bit more. And you say to and you're being smart about it, guys. Only play a very small position of of what you're wanting to play. And we're going to assume that you have much more than, say 4 Bitcoin, just as an example, okay? Actually, you know what? Let's use a smaller example so I can relate to people as well. Let's say you wanted to play altogether 1 Bitcoin, just a very round and very smooth number. Okay, let's say your bankroll was anywhere between $20,000 to $30,000, and altogether you're wanting to play roughly 1 Bitcoins or about $8,000, just as an example. Okay, so now you've bought yourself a quarter of a Bitcoin right here, okay? You bought a quarter of a Bitcoin at $8,000. And now it goes down a little bit more, as you can see, right? as you can see, it goes down a little bit more, right? A lot more actually. And so now it gets to $7,000, okay? And you're like, and now you're saving it, and you say to yourself, okay, I believe very shortly that the price is going to reverse, and I will actually keep purchasing on the way down to dollar cost average and to get a good price averaging because I firmly believe that is going to go down and my stop loss will be at $5,000. Okay, so now we originally have one bit or a quarter of a Bitcoin, right? Our target is roughly $12,000. That's where we're targeting for it to hit. And our stop loss is, right there at $5,000, right? So now we have a risk to reward of 1.33, as you guys can see here already, right? So, but it goes down to $7,000 now. So you decide to buy another quarter of a Bitcoin, right? So now what you guys will actually notice is this, okay? Now you have spent a total of $3,750. But guys, the price of your Bitcoin is now averaged out to $7,500, okay? $7,500. And now your price changes. Your price changes to $7,500 right here, okay? And now it actually changes up your risk to reward. Notice how this risk to reward is now 1.8 because you actually ended up averaging out your price, guys, right? So now you actually have a way better situation than before because now your risk to reward is actually higher because remember in the previous video for lesson 2, what we want to focus on is always getting the highest possible risk to reward, right? But now you say, oh no, the price is actually dropping a little bit more. And now it's actually going all the way down to $6,000. Well, according to this spreadsheet, you wanted to play a total of one Bitcoin, right, guys? Remember, we said earlier we wanted to play Bitcoin, so it gets to the $6,000 range. So now you're going to buy another zero point 0.5 Bitcoin because you only bought a tiny bit at first, a quarter. And then as it kept going down, you guys bought more and more. And if you guys notice now, check out the price of your average, right here. The average price is actually 6,750 now. Now check out your risk to reward. That's what you want, guys, okay? You want your risk to reward to be about 2 or 3 to 1. And that's a great risk to reward ratio because now you get a chance to make 3 times more than what you can lose, right? So now if you look on here and we actually change it up as well, your price average is now 67.50, right? And now your target is still the same at $12,000, okay? And now your stop loss, remember what the stop loss is, guys. The stop loss is a way for you to minimize how much money you're going to lose if you were actually wrong on your call, right? So if you're wrong on your call, this is a way of protecting you because we have to think about it from trading from the perspective of a casino, right? We want to increase our probability of winning by learning how to do tactical analysis better. And as we practice these skills of ours, trust me, guys, your skills are going to get much higher than a 50% win ratio, like way higher than 50%. Okay. Like I told you, my win ratio is about 75%, as you guys see from Twitter, and as you guys see from my calls as well, right, on Twitter. I mean, if you guys have seen, if you guys have seen my January calls, right, I used to keep a public track record of every single one of my calls. And this one, for example, was the one from November that I kept where I made 21 calls, okay, on Twitter and on YouTube, and I actually got 19 of them out of 21 right, which was a 90.5% win ratio. And my loss ratio was actually only 9.5%, which was 2 out of 21, which is okay. I'm okay with that. But what I'm getting to is when you guys get good enough with your technical analysis, it's only going to go uphill from here, guys. And you guys are going to thrive when it comes to technical analysis, and you will increase your probability of winning by much more than 50%. Just imagine for a moment, guys, winning for more than 50% of the time with a good risk to reward ratio, right? Like we were talking about in lesson 2, well, it can only go uphill from here, guys. Like it can only get a lot better, as you guys know already. And I really genuinely believe that you guys will have the potential to get much higher than 50% risk to reward ratios. So now, guys, now, does that look really acceptable? Remember how we were talking about risk to reward before? So the green, right, this right here refers to your entry price. So we averaged out our price just now to 67.50, right? To 67.50, and then we are targeting $1,200. So the top of this green box refers to the target that you want to target, the price. And the red bottom right here refers to if it goes against you, you are going to take your loss right then and there. Despite the great risk to reward ratio, right? We also have to factor in that right here, this is a really big possible potential loss as well. So this is a very risky play for newer traders, but the same risk to reward ratio still applies. So I hope that makes a lot of sense right here, guys. Okay, I hope this makes a lot of sense. So let's just say, right? Let's just give you guys another really good example. And we're going to keep giving you guys more and more examples. But just to reiterate a few times, dollar cost averaging is a technique to ensure that you are not stuck in one position and purchasing it from that price only. It is also a way for you to allow yourself to change up your risk to reward ratio as well, as I've demonstrated right here, right? So if you have a great risk to reward ratio, or sorry, if you have a decent risk to reward ratio and it keeps going down, but the target is still roughly the same, you can modify that risk to reward ratio. Now, I know these concepts might be a little bit more advanced to some people right now, but I assure you guys, when we talk a lot more about it over time, it's going to be a great way for you guys to put the theory into practice. And once you guys start buying from these different positions, never ever buy, guys, from one position. Never, no matter what anybody says, never ever buy, okay, from one specific position only. Always make sure that you guys are buying from different positions to get the best price average. Now, let's say, just as an example over here, it actually never went down to even 6K. Well, if it started reversing instead, right? And you find that the market is actually on an uptrend now, well, instead of, because you added 25% of your position at the beginning there, well, you guys can always add the majority of your position on the uptrend. And this is called buying into strength, okay? A lot of the times we like to buy into strength instead of just accumulating. So there are really two ways that you buy when you think about it, right? One way is as it goes down, you just keep laddering those buys of yours, okay? You just keep laddering your buys of yours, and as the price drops lower and lower and lower and lower, then you're gonna get yourself you're gonna ensure that you're going to catch these right on the bottom as it goes down, right? And the second, that's called basically accumulating, right? We are accumulating on the way down. And now the second way to purchase is to buy into strength. And when you buy into strength, that's going to allow you on an uptrend, for example, when there's a lot of volume for you to add onto strength. So let's just see if I can give you guys a very clear-cut example, okay? So right now, I'm in a position, for example, I'm in I think like a $25,000 position, for example, okay? So I'm just going to give you guys a really clear example of laddering, okay? So just as an example, let's say that I believe that it's actually going to bounce somewhere between 1500 and 1550, right? So let's just say I'm going to buy one Bitcoin Cash at 1500, right? One Bitcoin Cash or at 1500, just as an example right here. Okay, that makes sense. Actually, I'll raise it a little bit just so you guys can see it on the chart here as well. Let's say 1550. Let's say I believe that it's going to bounce at 1550. You guys see my line right here, and I also believe, it could possibly, it's going to fall somewhere between 1500, or sorry, 1550 and perhaps 1600, we'll say instead. Okay, so now I'm going to put 1560, I'll buy there. At 1570, I'll buy here. 1580, I'll buy there. 1590, I'll buy here as well, right? So as it goes down, I'm going to basically be catching it. Or even if it goes lower, right? It goes lower and lower and lower. And now I'm going to be buying even more, just as an example, right? So sometimes when I go to bed, I actually have all these ladders set up. So if you guys look at it, right? There's all these ladders, right? These are laddering techniques where you're going to be buying it maybe more and more on the way down. So perhaps on the way down, I'll be actually buying more. Let's say I'll end up buying 3 Bitcoin Cash much near the bottom because it's heavier weighted, right? Think of it as weighted more as it gets to the actual bottom, right? So perhaps I want to buy a lot more just around here, just as an example for you guys, right? So I'm just giving you guys a good example where if it does get to the bottom, perhaps down to over here, okay, I'll be actually buying more because you want to make sure you purchase more near the bottom to average out your price even more. So that's just to give you guys a really clear-cut example of how a lot of people end up playing the market when they do want to dollar cost average there. I'm just going to put in my bid right here. I'm down a little bit, as you guys saw right there, right? But I'm probably going to take a loss for this one, but it's okay though. Sometimes you will end up losing, but make sure you guys stay positive, right? It's a mental game. Make sure we're thinking of the long run. Make sure we're not focusing on one small, simple trade, and that we realize that this is going to be a marathon, and that we want to make sure we focus on a big sprint, or sorry, on the marathon rather than the sprint. So let's look at another example, okay? So give you guys some really clear-cut examples of what to do and what not to do. Let's take a look at another trade, but this time we're going to take a look at EOS, all right? EOS seems to be a very good coin to be day trading lately, so it's something that's been definitely on my mind to hold long term as well. But in terms of EOS, a really relevant point, as you guys would have noticed, is right around here, right? When it was recently released in the beginning of August here, right? And also, if you guys notice right there, very, very relevant point. I'm sure we can all agree. And if you guys are, actually, I shouldn't say that yet because some of you guys might not be too experienced yet. That's new in this course, right? All right. So if we take a look right here, the reason why this is a very relevant point is simply because there's a lot of contact points in this particular green box, right? When it was recently released, and especially right here as well. So as it actually got very close to this particular region, we would have said to ourselves, all right, well, this is going to be an incredible place to most likely buy. So you would have chose a target of at least the all-time high, you can say, right? At least the all-time high, because you want to remain bullish in the marketplace in general. In cryptocurrency, you guys have to make sure that you're very bullish long term, and that's going to help you be very successful down the road, in my personal opinion. So a really good time to have been interested in it is as it actually drew very close to these particular regions down over here, right? So let's get out our spreadsheet. So the lowest that it actually got was about $4 or $3.87. Okay, that's a pretty reasonable number in my opinion to be interested in it. We'll just say closer to the $4 range, right? So let's say that you guys are gonna say, I'm gonna start buying at $6, right? And I'm gonna target, say, the all-time high of $18.67. Let's just say that as an example, 18.67. So we'll put this into our spreadsheet here. That's available to download in the link below. You guys will definitely be able to find this. So 1867, and you say to yourself, I want to buy, we'll just say a round number that you guys can all relate with. You can use whatever you want. I will start buying it at $6, right? And let's just say you want to say buy altogether. We'll just say 400 coins. Okay, just 400 coins altogether is what you are comfortable to play, and that's going to be a very reasonable number to actually buy. So now we're in a position with a very good risk to reward ratio. Would you guys agree? Right? The risk to reward ratio right here, and we'll say our stop loss is about $3, right? Our stop loss is about $3 because we want to choose a point that's very relevant in terms of it being no lower than these particular regions right here, where there's a lot of price activity and price action, right? So if you were to set your stop loss around $3, let's just say you entered a trade here, this would have been an incredibly good setup for you guys to have considered, right? So we'll say $6 here, and we'll target about 18, we'll say, right? And the entry price was about $6, and now the stop loss was actually going to be at about $3, right? So now you've got yourself a really good risk to reward of about 3.98, right? And you would not dare close your position until it actually. Remember, keep in mind, we were talking about trading like a casino in lesson 2, right? And if you keep taking these setups over time, inevitably, you guys are going to be very successful traders because you have to think about it from the perspective of trading like a casino. And if you trade it like a casino over time, guys, you're always going to win, right? If you also focus on increasing the probability of you being right more than 50% of the time. So as you become better traders, once again, you guys are going to inevitably increase your probability of winning over time. So to me, this was kind of a no-brainer, right? But I know it might not be a no-brainer to a lot of you guys. Here, this wick fell to about $3. So $3 would have been a very perfectly great place to take your stop loss. And perhaps $18 is a little high. Okay, let's shoot for something a little bit more realistic, okay? Let's actually shoot for a target of, we'll just say $10, all right? $10 is a reasonable target, which is the previous swing high right there. So I'll change these as well to $10, okay? So you see your risk to reward of about 1.33, which is really not the best setup when you look at it right here, right? 1.33, but it's still a fairly decent trade, right? You got a chance to, but this is a really big possible loss in terms of percentage, right? But we're leaving percentage out of it for now, and we're just focusing specifically on the fact of risk to reward, okay? But now it actually decides to go down a little bit, guys. It went down, obviously, quite a bit, right? So now you're going to buy even more at $5 range, right? You're going to buy another 100 coins as it keeps going down because you firmly believe that around the $3, $4 range, it could be the very bottom. Because remember, guys, that without risk, there's absolutely no possibility of reward. So now what you've done is you've dollar cost averaged your price, and your price is now averaged out to $5.50, okay? And now you have 200 position. So check that out. Your risk to reward ratio actually increase, right? So now you're actually in a much better position to be successful. Not successful, but in terms of risk to reward, it's a lot more acceptable in my opinion. So now we change this to $5.50, right? Our target is still $10 and our stop loss is still $3, right? So if it actually gets to $3, you say to yourself, okay, I'm going to take my loss, right? So now you've actually averaged out your cost even more. But guess what, guys? It actually went down even more, okay? It went down even more. So now, because it went down even more to say the $4 or $3 ranges, you're now going to buy the rest, okay, of your coins here, right? You're now going to spend the rest of your 50% of your position that you wanted to spend, which actually averaged out your cost to about $4.75, right? And now your risk to reward is actually phenomenal. It's at 3.0. So when we go to this chart over here, When we go to this chart right over here, we can change this to 4.75 now, okay? And now our target is say still $10 and our price is still about the same, right? Our price is for the stop loss is still $3. So I hope that this makes a lot of sense. So now you actually averaged out your price to pretty much right where near the bottom is, which is phenomenal, guys. Okay. Now the thing that you guys can also do is once it gets to certain peaks, what I always advise for people to do is if you are buying to dollar cost average your price, what I also recommend that people do is take profit in the same way. Take little chunks of your profit as it goes up. What I always recommend the people to do is to focus on taking profit as it goes up near the very top. Sometimes it's really good to wait until a downtrend is confirmed, but other times it's also really good to make sure that you're taking your profit on the way to the top because, well, sometimes you miss taking profit and people just end up dumping, right? So get into the very good habit of maybe taking 10, 20, 15, 50% of your profit. If you are still very bullish in terms of it reaching much higher highs, you might want to take your profit, for example, right over here, right? Right over here. And then you might actually want to consider just buying more back in as we're bouncing off of some moving averages. So I hope these two examples have really helped out thus far. And once again, the point of dollar cost averaging is to make sure, excuse me there, I pulled that up by accident, is to make sure that you guys are familiar with the concept of never buying into one position. If you buy it in from one position, you end up locking yourself into these really bad positions and you have absolutely no control over your risks. So what we want to always do is we want to focus on making sure that we understand that risk can be adjusted, right? It can be changed. It's like how I'm showing you how to change it right now. That's why never ever, guys, play your entire position. It's something you don't ever want to do, okay? You always want to make sure that you have some leeway to purchase more just in case, right? It goes down a little bit more. But let's say it actually never went down, guys. Let's say it never went down lower than $4, right? And $5 was the lowest. Well, when it starts to break upwards and onto strength, then you guys can actually buy more into strength. Remember what we were talking about earlier in terms of buying more into strength? There's two ways that you can buy, right? The one way is for you to accumulate and you ladder your buys, ladder your buys, ladder your buys on the way down. And the second way is to buy into strength when it breaks a particular support or resistance, which is what I highly recommend for people to do all the time as well. And for, I think, let me just double check what lesson it is, right? It's lesson number, I'll just show you guys right here where we'll be talking about it, is lesson 11, common patterns and playing breakouts. That's going to be what we're going to talk about for lesson 11. So these are crucial for us to understand the theories of how to purchase. So once again, it's one, we can purchase by accumulating as we're laddering on the way down, right? Just so we can get a best dollar cost average. And the second way that we do it is to simply purchase into strength as it breaks out. And that'll be covered in a future lesson as well. So I hope that I've given you guys tons of insight and just general advice that's going to help you out throughout your cryptocurrency career. I want to thank you guys for joining me for this particular lesson. So the next lesson that we're going to be talking about is how to read the level 2 order book, how to understand what bids and asks are. So thank you very much for joining me for lesson number 3 for dollar cost averaging and laddering your buys. So if you guys have to take away something from this, make sure you take away the fact that never, ever, ever buy from one position only. Only play a very small portion of your principal position that you originally would like to play. Okay, make sure you're only playing a small portion. As it goes down, you're buying a little bit more. When you believe it's getting close to the bottom, maybe you can buy a lot more. And then if it doesn't even go lower, right? Then you still have, say, 75% of your position available. Buy it on the breakout, okay? If you buy it on the breakout as it breaks out right there, then we're going to be covering that in the future lesson once again. That'll be for lesson 11, common patterns in playing breakouts. When it breaks these supports and these resistances, just buy into strength and add the majority to your position. So thank you very much, guys. I had a great time talking to you guys about laddering and dollar cost averaging. It's been a pleasure helping you guys through this particular session of this lesson. I hope that you guys are taking away a lot from this. I hope that you guys are having fun and you're learning tons from here. And I tremendously and sincerely and genuinely hope that you guys are going to be on your path to becoming a much better trader. So thank you once again for joining me for lesson 3, and I will see you guys very soon for lesson number 4, reading level 2 order books, understanding bids and ask. Bye now. Have a great day.